In celebration of Earth Month, we'd like to thank this month's sponsor, Big Pivot Partners. Big Pivot is an award-winning communications design firm with solutions ranging from sustainability and corporate responsibility projects like ESG, DE&I, and TCFD reports to investor communications. As strategic consultants, they've earned a reputation for delivering strategic, creative solutions with hands-on project management that ensures projects deliver on time and within budget. Enjoy this episode.
Hi everyone, welcome back to ESG Decoded. I'm your host, Kaitlyn Allen, and today I am welcoming Josh Hile of Citizen Mint to the podcast. Hey Josh.
Hey, I'm so excited to be here.
I know, we had an extraordinarily long tech difficulty moment before this, so very happy to get started. We're going to be talking about democratizing access to impact investing. So a lot of folks may know this, that I just love the concept of impact investing, the idea that we can prosper while solving shared global challenges. I think it's the name of the game really in the end. And so Josh has a new platform called Citizen Mint that's aiming to support democratization of access to invest capital for impact. So we're really excited to talk about that. First, I will introduce Josh. So prior to becoming the co-founder and CEO of Citizen Mint, Josh was the director of investment strategy and research at Laird Norton Wealth Management, a $16 billion registered investment advisor headquartered in Seattle. Prior to this, Josh worked at Russell Investments performing due diligence on fund managers for Russell's mutual fund and consulting divisions. And Josh has a bachelor's in business and an MBA from University of Washington's Foster School of Business. He's also a chartered financial analyst, a CFA, and a certified public accountant, a CPA. So lots more acronyms for us today. And I know there's more coming. So thanks so much for being here, Josh. We're excited to talk about this.
Yeah, I'm so excited to tell everybody about it.
Well, let's just jump right in then. So what is Citizen Mint and why did you start this company?
Yeah, no, definitely. So Citizen Mint essentially provides wealth managers and investors a trusted, easy to use platform to access private investment opportunities that can generate both financial returns as well as positive social and environmental impact. So think affordable workforce housing, solar wind development, top tier impact private equity, venture capital, debt funds that we're providing access to. And we believe that this is just where the market is going. As Kaitlyn mentioned, it's like people want better access to alternative investments, and they also want investments that really align with their values and issue areas. And it also just aligns with just major global challenges around healthcare, education, or affordability. So what I learned in my prior wealth management role is, especially from our next gen clients at Laird Norton, was that they said, hey, I don't want my investments to be invested in traditional just stocks and bonds. I want to be able to invest in these alternative assets, and I want to do something good with that. And is there this balance between, positive returns and also being able to do good with our money? And it's like, yes, there is. There's lots of opportunities within that space.
Well, tell us about some of those opportunities. I mean, I know that's still the number one myth is that you can't make money while doing good. Still a very pervasive myth. Obviously, there are lots of examples where it didn't work out, but that's just how we're learning how to do this the right way, right? And to be able to see the industry, how far it's come, not just with basic ESG risk screens and that sort of thing, but actually really thinking about the impact side. So what will this do in a positive way? Not just what are the ESG risks of this investment? So let's talk about that part.
Yeah, no, definitely. I think the industry has really grown a lot over the last decade and a half. And essentially, there's been a lot of talent infusion into the industry where people who previously might not have had a specific impact orientation, but were very talented from an investment perspective, have shifted over to say, hey, there's actually this massive opportunity here. We do need to solve these global issues. And there's opportunity to kind of like make good returns for our ultimate investors and bring more capital. Because I think that's the whole idea of impact investing is, hey, we need to actually bring a lot more capital into these global issue areas because it's not going to be solved by governments or just institutions alone. Like we need to all collectively put capital into this to solve these issues. So if we think about like some of the opportunities that we're seeing within the marketplace, I think the one that like is most apparent is climate change and the opportunities around climate change, whether it's like solar, wind power. And I mean, even in the last year, everybody talks about energy security. And it's like, how do you actually power things without oil? Especially when some nefarious actors might be like Russia might be doing things within the world that makes it really expensive for oil or natural gas. And so we need to shift off those. And so we need to invest in solar, wind power, or other kind of opportunities for renewable energy. Another one is climate change. And I think there's just a lot of innovation happening within the space around new technologies from an energy perspective. Also just thinking about like what drives some of these issues. And it's around maybe like sustainability. So having better building practices. It could be around manufacturing, just having better manufacturing processes over time and being able to like think about semiconductors and how much water usage and being able to recycle that water usage over time and be able to reutilize some of our precious resources in a better way and just reduce the negative externalities of those businesses over time. Then we can move on to affordability and the affordability crisis within the US. And, you know, it's very expensive to live in a lot of the major cities. And so how do you provide housing that's affordable and that's not going to be over somebody's income of like 40% of their income goes to their housing. Hopefully we keep it below that. And so like being able to build in a way that's sustainable and that's cheaper than it's been in the past to make these interesting investment opportunities. Also, it could be within like community development loans, which is like what the acronym would be CDFI. And that's essentially just providing loans to different community organizations. It could be building a hospital, or it could be providing microloans to individuals who are starting a business but haven't had credit scores in the past, or need help with increasing the business growth, where they just haven't had that in the past from a traditional bank. So I think there's just this plethora of opportunities out there, and there's a lot of new talent coming into it to take advantage of it. And you see this from major asset managers. Almost every major asset manager is creating an impact fund. Some of these are very large, like multi-billion-dollar impact funds, from whether it's like KKR or Bain or Wellington or Texas Pacific Group, which has, I think, an $8 billion impact fund called the Rise Fund. So there is just a lot of capital flowing in this direction, and clients are more and more asking about it and wanting their wealth advisor to provide opportunities here.
Yeah, that's amazing, Josh. I mean, great overview. The three kind of topic areas I'm hearing: environmental, community health, and wellness potentially, and then empowerment.
Yes, empowerment is one of those where it's really there's certain areas around diversity, equity, and inclusion, and financial inclusion with the microloan part of that, and being able to bring people who previously haven't had banking relationships or credit scores into the fold and be able to like help them through that process.
That's amazing. I mean, I think that's stuff a lot of us, the ESG Decoded listeners, who are usually professionals, usually working in a big corporation or in capital markets, it's very hard for us to relate to that idea, but that's still a very pervasive issue everywhere, not just in other places, right? It's also here in the United States. So that's a really interesting one to me. So when you say your marketplace will help provide access to those types of opportunities, so I'm hearing the three categories that you're focused on: the environmental, community health, wellness, and empowerment. How do you decide what type of opportunity, or how do you vet the opportunities that come onto your platform?
Yeah, no, definitely. So I think there's kind of this sourcing aspect where, you know, we're going out to the marketplace and seeing where the best opportunities actually lie, and also trying to align that with where people want to put their capital to work. Everybody has a different value or issue area. And so it's where's this client's trying to put capital to work? A lot are looking at climate change and sustainability as something they care about. A lot are looking at affordability as something they care about. So those have been the more pertinent focus as of right now for sourcing opportunities within those spaces. So for affordable workforce housing, it's kind of building this marketplace of affordable and workforce housing developers across the US and saying, okay, what kind of projects are you doing? Are these actually impactful in the areas you're doing them? What's the actual returns? And does these returns make sense to put capital to work? And like, what risk are you actually taking in this? Because it's always this return versus risk dynamic. From an institutional research standpoint, we have to find like really great opportunities for our clients and highly curated and kind of do all the back end due diligence work that does take a lot of time. So, doing reference checks, doing background checks, reviewing the comps in the area, or just like what other buildings are selling for and what's the rents of these buildings. And then also saying like, for a lot of the affordable workforce housing opportunities we're doing, we're really focused on this kind of what we call the missing middle. And it's essentially people who make between 60 to 80% of area median income, or AMI. It's not low income housing in a lot of cases, because that is tougher to get returns within that space. You really need a lot of grants and subsidies from the government. But between that 60 to 80%, this is, housing teachers and nurses and firefighters and retail workers and people who just haven't traditionally been able to live near their jobs in a lot of cases in urban areas because of the cost of housing. And so providing really high quality housing for that group of individuals is really where we've been focused. Like, these opportunities can come from so many different places, but it just takes a lot of time kind of just sourcing and building that universe on our side. But that's what we're trying to do and solve for that issue. If you don't have somebody doing that, it's just too much of a burden on a wealth manager and an individual investor to actually do that kind of due diligence.
Yeah, it's a very interesting example. And I think you mentioned something that raises a question I heard a couple of times: returns matter. So this is not impact investing, it's not philanthropy, right? The idea is that you're not intending to be concessionary in your returns.
Yeah, and that's 100% right. And like, there is concessionary impact investing. We've just decided that that's not where we're going to be within the marketplace. And some people think of impact investing as concessionary. We're like, it doesn't have to be. And there's still this ability to get benchmark or better returns within these particular opportunities and still do good in the world. And I think it's just, you see it from the opportunity set, you see it from who the talent that's flowing in from an investment perspective. They believe the same thing. So I think that we're just in a mind shift of where people are going for the future.
So something else that's important here, so your project, and we can just use the affordable housing example, your project is intended to offer housing to at a more reasonable price point for the professionals that work in the world and are so critical in our communities. How do you measure that you actually had an impact? How do you know at the end of the day that your impact investment did the good that you wanted it to do?
No, that's a great question. I think on the front end, we kind of have some metrics where we say, okay, how many people are we housing, and what area median income are we housing them? How many jobs is this creating? And that's when we're kind of building the project and doing the construction team is doing the development. And then on the back end of that is, actually taking quizzes or surveys with the residents who actually do move into the building and saying, how much did you drive before you moved into this building? And how much do you drive now? Also, like, beyond that, like measuring their like happiness. Because I mean, like, a lot of those things do correlate to your happiness with your day and life and like where the building's located. And it's like, well, hopefully it's located in a great area. Most of the ones we're selecting are like located near, great transit options and near parks and restaurants. And so like, hopefully that does add to their lifestyle and what they're able to do with that. So we can take those measurements and we can have those as like actual like real measurements and show those to our investors. But then beyond that, we're also looking at water usage of the building and energy usage of the building and determining like, because I mean, a lot of these buildings are built very green from that perspective where, you know, they're up to code or they're almost LEED certified in a lot of cases. Being able to do it from multiple dimensions of like, yes, there's this human element and that's what we're solving for, but there's also these environmental elements that we're solving for as well.
So that's a really helpful example. So overall for the impact measurement, you kind of have the front end type of metrics that you're looking for. And then you have the, I guess it's not just back end as if it's over, like kind of the continual metrics that both capture the impact on the people and the impact on other issues like environmental, for example. This isn't like random, like it feels good, we think it'll make impact. It's like, no, you're actually making sure it does.
And I think that's what the investors want, is they want to feel that they actually made a difference, and that there is one of the things like that's key to our impact mission is like, it needs to be measurable. Like there needs to be actual measurable data that we can provide to investors, because that's like, there is certain storytelling around these things that may happen. Maybe you have to have those discussions and talk about a specific family or a specific person and how it changed their life. But at the same time, there is measurable options to do this. And some of it's easier on like the sustainability and like renewable energy side, where it's just carbon abatement. But in other cases, like it might be in the private equity sphere, job satisfaction of the workers and their ability to increase their wages over time. And so there is some like very specific metrics though, that we talk with whoever we're investing with, that coming into and be like, hey, how are we going to actually measure this? And these are the things from a Citizen Mint perspective that we would like to be measured.
Yeah, that's awesome. I think this is, to me, it's just an enlightening of, it's kind of a natural evolution. I think a lot of people are somehow still scratching their heads about all this. And it's like, come on, you guys, these problems are in our face every day, all the time. Don't you want to live in a better world? Like it's kind of obvious.
Yes.
So I just think it's cool that there's this natural evolution you were talking about with the talent, for example, the talent inflows, the new ideas on how to prosper while making an impact. So I think it's really cool and really neat that Citizen Mint is able to kind of fill one of those gaps to make it more accessible. So let's end with just talking about your vision. So where do you see this all going? I kind of still feel like we're at the beginning of an era. I think a lot of us came into ESG investing, corporate ESG, sustainability, all of this kind of not directly in our careers because it wasn't really a thing when we were in college. I mean, it was a thing. There were programs, but like you couldn't get a master's. At least I didn't know you could.
Yeah.
There was one. I didn't know about it. So I feel like we're at the beginning. Where do you see this going? What's your vision?
Yeah, and that's a great point. I do feel like we're really hitting that inflection point at the current point in time where people are talking about it. It is like, I mean, corporations are very much driving a lot of these discussions, whether it's like Amazon or Microsoft having these massive internal funds to deal with some of these issues, whether it's around affordable housing or energy usage or whatever it might be. You see every like very major universities putting a sustainability or impact program. So whether it's Stanford's sustainability program, and I think they got a massive over $100 million grant for that. Duke has a very well-known impact program. USC has a very well-known impact program. So those programs are really around social entrepreneurs and being able to direct capital and resources and time and effort into these very global challenges. But I think if you just think about where venture capital is going, it follows where there's opportunities and problems to be solved. So education is a huge problem we're going to have to solve. Healthcare is a huge problem we're going to have to solve. Sustainability is a huge problem. Affordability. So it's like people are saying there is these massive opportunity sets. They're multi-trillion-dollar opportunities, and we should be going after these. And there's money to be made on this at the same time. And you can put your capital work in these things that everybody says, hey, we actually do need to do something here. So how can we be innovative and do something within this space? And how can we drive capital to this space? And I think for our generation, it's saying, that's where I want my money invested. And I want to actually see the impact that's happening. I want it to be measurable. And I want to know that I'm doing my part with my capital, but also securing my financial future at the same time. That's really important for people. And that's what we're trying to do. So I think from an overall vision standpoint, I think we are moving into a place where most investing will be impact investing in the future. It might not even be called that, because essentially once you move over that hump where it's just well, that's just investing. We're going to do good and we're going to get returns at the same time, and we're going to go after these challenges. So we're trying to say, we want to be on the forefront of that and provide better options for individuals to get their capital invested faster. So, and more easily with their wealth advisor.
Very cool. Yeah, I love that. Yeah. That vision. So it'll just be investing. Going from impact investing, ESG investing, it's just going to be investing.
Yes.
I will say one more thing that occurred to me while you were speaking, which is, the other side of the coin here is realizing that, say, traditional, I hate to use that word because what is traditional investing, but say pre this movement or pre-impact investing, it is the sole focus on returns that has actually caused a lot of the challenges that we're now trying to solve. So the affordable housing crisis, again, perfect example. I think that it's also that sort of front end of hey, we could make money doing this thing. Well, of course we could. We could make money doing lots and lots of things. We could also deal drugs, but are we going to deal drugs? Yeah. Because is it right to deal drugs? Is it right to make an investment that is going to drive up the cost of living for everybody in the area? I mean, these are the things that I think on the front end, people within these large corporations, within investment houses, within capital markets more generally, we need to be thinking about that. Yeah, of course we could make money doing that. Should we make money doing that? Or could we put that capital to work to actually solve the problem that's been created, or do we want to exacerbate it? So there's that front end too. Yeah,
no, definitely. And I think people are really being more thoughtful around those very specific issues, because it does over time drive how people see their brand. And there's been high correlation with brands that are more sustainability focused being worth a lot more over time, and just having better customer loyalty. So I think they have to think about these specific issues.
Yeah. Josh, thanks for being on. I think it's been a really interesting conversation. I loved talking about the affordable housing as kind of the example we use throughout all of this, because people today, all they think when they think ESG is climate change or diversity, equity, inclusion. Sure, those are two complex issues within E&S, but there's so much more. I love that we kind of had a different type of conversation today. So thank you so much.
Yeah, no, it was great. Of course. Thank you so much for having me.
Thank you.
Thanks again to this month's sponsor, Big Pivot Partners. Learn more by visiting www.bigpivot.net.